Hello friends, this is Victor here. Welcome back to the Intelligent Investor channel. In this video, I'm going to talk about why I believe Nvidia is still the best AI semiconductor company for long-term investing. I will talk about whether it's time to buy Nvidia stock and whether Nvidia stock is still undervalued, fairly valued, or overvalued now. Just to give you more context, you may remember that I've been very bullish on Nvidia stock since 2021, even before ChatGPT came out. In fact, I've made many Nvidia stock analysis videos since 2021. These green arrows show when I made the previous Nvidia stock analysis videos. If you have been following my videos and buying more Nvidia shares over time, you have made very large gains from Nvidia by now. Recently, right before I started making this video, Nvidia reported very strong Q3 revenue and earnings growth that beat analyst estimates. Nvidia also gave great guidance for the next quarter, which was higher than analyst estimates. However, Nvidia stock still dropped quite a bit after the company's earnings release, so this did not make sense at all. I think one of the biggest reasons is that the market has unrealistic expectations of Nvidia. For example, the market expects that Nvidia will continue to have very large earnings beats or triple-digit growth rates going forward. This is not realistic at all. Here's the deal, the market is not always rational. The best time to invest in Nvidia is whenever there's a large dip below its intrinsic value. For example, I bought more Nvidia stock a few months ago when Nvidia dipped well below its fair value. So in this video, I'm going to give you an in-depth analysis of Nvidia stock. I will talk about why I believe Nvidia is still the best AI semiconductor company for long-term investing. You will learn about these topics in this video. First, I will talk about Nvidia's financials and the biggest risk to consider. Then I will talk about Nvidia's expected growth rates, Nvidia's long-term growth prospects in the AI data center market, Nvidia stock valuation, and whether I will buy more Nvidia shares going forward. If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent investing videos every week that will help you become a great investor. Each video usually takes me more than 30 hours to make. So if you like this channel and want to support it, check out my Patreon blog in the video description. Our goal is to help our members become multi-millionaires through investing. Once you become a premium member, you can follow all the stocks I'm investing for the long term, follow my personal stock portfolios, and download the latest intrinsic valuation models for all the stocks I'm analyzing, so you will know when a stock becomes undervalued, fairly valued, or overvalued now. Also, you will have access to all my latest stock ratings for all the stocks I'm analyzing. The link is in the video description. Take a look. Let's start. Let's talk about Nvidia's biggest risk to consider first. First of all, the Trump administration will likely impose more trade restrictions and chip export restrictions that will impact all the US semiconductor and tech companies, including Nvidia, AMD, Qualcomm, and even Apple. Moreover, Trump wants to increase tariffs on all imported goods, especially from China. According to Reuters, President-elect Donald Trump wants to increase tariffs on all imported goods from other countries. Of course, the purpose is to protect US businesses, increase US manufacturing, and reduce trade deficits. Of course, Trump's trade policies and tariffs will change. However, at the time of making this video, Trump is planning to impose a blanket tariff of 10% or more on all imported goods from other countries. Specifically, Trump is targeting imports from China. He wants to increase tariffs on Chinese imports to at least 60%. Here's the important part you should know. Nvidia does not manufacture its AI chips. Nvidia is a fabless chip designer. Just like Apple and AMD, Nvidia does not own its semiconductor fab for mass producing chips. Nvidia always relies on Taiwan Semiconductor Manufacturing Company, or TSMC, the largest and most important semiconductor foundry in the world, to manufacture all its AI chips. The important question is how Trump's trade policies, chip export restrictions, and higher tariffs will affect Nvidia going forward. Nvidia's Jensen Huang said this.
Whatever the new administration decides, we will of course support the administration, and that's the highest mandate. And then after that, do the best we can, and just as we always do. And so we have to simultaneously, and we will comply with any regulation that comes along fully, and support our customers to the best of our abilities. And and compete in the marketplace. We'll do all of these three things simultaneously.
Investors are concerned that Nvidia's gross margin may drop because of higher tariffs on AI chips and AI systems that are imported from Taiwan and other countries in Asia. If Trump imposes higher tariffs on imported chips from Taiwan, it will impact all the major tech companies in the US and not just Nvidia. The reason is that all the major tech companies rely on TSMC to manufacture their chips. TSMC manufactures around 90% of the most leading-edge chips in the world. This is my prediction. Suppose Trump imposes higher tariffs on imported chips from Taiwan and other countries. In that case, I believe Nvidia will pass high costs onto its customers because it wants to maintain very high margins. I don't think higher tariffs will impact Nvidia's margins much because there's an enormous demand for Nvidia's AI chips and AI systems. Nvidia's largest customers such as Microsoft, Google, Meta, Amazon, OpenAI, Tesla, and xAI will continue buying Nvidia's AI GPUs and AI supercomputers, such as the upcoming Blackwell, because there are simply no better alternatives to Nvidia. Now, many investors are concerned that Nvidia will face a lot more competition going forward because all the major tech companies and hyperscale cloud providers are making their AI chips. As you may already know, Nvidia has a new monopoly in the AI server market. Nvidia has around 80% to 90% of the AI server market. Nvidia will face a lot more competition going forward because Nvidia's largest customers do not want to rely 100% on Nvidia. Nvidia's largest customers such as Amazon, Google, Microsoft, Meta, OpenAI, and even Tesla are all making their AI chips because Nvidia's AI supercomputers are extremely expensive. For example, each NVIDIA Blackwell GPU can cost between $30,000 and $70,000 depending on the model. If you want to buy the top-end Blackwell NVL72 AI system, each server can easily cost around $3 million. And if you want to build an AI data center that has 100,000 NVIDIA AI GPUs, it will cost several $billion. Let's take a look at this product roadmap here so you will know about NVIDIA's competition going forward. Here you can see that AMD, Intel, Google, Broadcom, Amazon, Microsoft, Meta, ByteDance, and Huawei are all making their AI GPUs or AI accelerators because they want to catch up to Nvidia. To fend off competition, Nvidia is moving to a 1-year product cycle from the previous 2-year product cycle. This means Nvidia will continue releasing newer AI chips and AI systems that are more powerful and more energy efficient every year. Of course, Nvidia wants to make sure that it will always be well ahead of its competitors. This 1-year cadence strategy is very similar to how Apple releases new iPhones every year. Here's the important part you should know. Many investors and analysts do not understand this. Many investors and analysts think that other companies can compete with Nvidia by just making better AI GPUs. Making AI GPUs alone is not enough to compete with Nvidia. Here's why. First of all, Nvidia is building the entire AI infrastructure and not just the AI GPU. Just to give you an example, Nvidia's upcoming Blackwell system consists of 7 different chips. The Blackwell B100 AI GPU is only one of them. Nvidia is building the entire AI infrastructure, which includes AI systems, AI hardware, AI GPUs, CPUs, DPUs, interconnects that connect all the AI GPUs together, InfiniBand and Ethernet networking switch that connect all the AI systems together, air cooling and liquid cooling systems, the CUDA AI software stack, and of course, the developers ecosystem. Nvidia is the only company in the world that is building the entire AI infrastructure. Nvidia has already been building the entire AI infrastructure for many years. Other competitors such as AMD, Intel, and the hyperscale cloud providers cannot compete with Nvidia in building large-scale AI systems because the other competitors are only focusing on building their AI GPUs or their custom ASIC AI accelerators. They are not building the entire AI infrastructure like Nvidia, which is extremely hard to copy. AMD understands that it is not possible to compete with Nvidia by just building better AI GPUs. This is why AMD is copying Nvidia's AI infrastructure strategy. AMD is acquiring ZT Systems and is starting to build rack-scale AI systems just like Nvidia. Here is another thing we have to consider. Even if competitors can build AI GPUs and custom ASIC AI accelerators that are comparable to Nvidia's latest AI GPUs, Nvidia's competitors will still be many years behind Nvidia's AI software stack, specifically Nvidia's CUDA accelerated computing platform. Other competitors do not have CUDA. CUDA is Nvidia's biggest competitive advantage. Based on what it's nearly impossible for competitors to copy CUDA because CUDA is already very well established and is supported by millions of developers around the world. CUDA is the gold standard for accelerating very compute-intensive applications using NVIDIA's GPUs. Most developers use CUDA along with NVIDIA's AI GPUs to accelerate computer graphics, AI workloads, AI training and inferencing, deep learning, scientific computing, data analysis, data processing, simulations, gene sequencing, and other computationally intensive applications. Also, CUDA has more than 400 domain-specific libraries that can accelerate thousands of applications across different industries. The most important applications right now are building frontier AI models, training and inferencing AI models, and developing AI applications. Based on what I know, other competing AI parallel computing platforms such as AMD's ROCm are far behind NVIDIA's CUDA libraries, APIs, and developer tools. CUDA only works on NVIDIA's AI GPUs and AI supercomputers. This means developers are forced to invest in NVIDIA's AI GPUs and AI supercomputers if they want to take advantage of CUDA. I believe NVIDIA will maintain over 80% of the AI server market over the long run because of CUDA and NVIDIA's other accelerated software stack. Here's another risk we should consider. Many news outlets like to exaggerate issues or spread fake news about NVIDIA. The biggest one is the information. Just a few months ago, the Information released a report claiming that NVIDIA's Blackwell would be delayed because of certain design issues regarding the photomask that is used to produce Blackwell chips. The Information purposely exaggerated the issue. After this report came out, NVIDIA stock dropped quite a lot for a few weeks because investors were concerned that Blackwell would be delayed. I knew the article was fake news. I knew the issue was hugely exaggerated, so I bought more NVIDIA shares during the large dip a few months ago. Now, right before I started making this video, the Information released another report stating that NVIDIA's Blackwell may be delayed again because of certain overheating issues. Of course, this issue is hugely exaggerated again. Going forward, I think it's very important to ignore all these articles that are creating a lot of fear. Most of them are noise or fake news. As of now, NVIDIA's upcoming Blackwell is supply constrained for at least several quarters in 2025. In fact, Blackwell is already sold out for 2025. Of course, the market always finds something to worry about. It's very important to focus on the much bigger picture instead. The much bigger picture is that NVIDIA is selling as many Blackwell systems as it can produce. And if customers cannot buy NVIDIA's next-gen Blackwell systems, many of them will likely buy NVIDIA's current-gen Hopper systems. So I'm not worried about these supply constraint issues. Management said this: we completed a successful mask change for Blackwell, our next data center architect that improved production yields. Blackwell production shipments are scheduled to begin in the fourth quarter of fiscal 2025 and will continue to ramp into fiscal 2026. We will be shipping both Hopper and Blackwell systems in the fourth quarter of fiscal 2025 and beyond. Both Hopper and Blackwell systems have certain supply constraints, and the demand for Blackwell is expected to exceed supply for several quarters in fiscal 2026. Let's take a look at NVIDIA's balance sheet. At the time of making this video, NVIDIA has a very strong balance sheet. For example, according to the most recent financials, NVIDIA had $38.5 billion in cash equivalents and marketable securities. In comparison, NVIDIA had $10 billion in long-term debt and long-term operating lease liabilities. This means NVIDIA can pay off all its debt and long-term lease liabilities in advance and still have around $20 billion cash left. Over the past 10 years, NVIDIA has had very consistent revenue growth, operating income growth, free cash flow growth, and free cash flow margin expansion in most years. NVIDIA used to earn the most revenue from its gaming business. NVIDIA's gaming business is very cyclical. Now, NVIDIA's business is less cyclical than before because more than 80% of its total revenue is coming from its data center business. Typically, Nvidia's data center business is much less cyclical than its gaming business. In terms of margins, Nvidia's gross margin, operating margin, net profit margin, and free cash flow margin are much higher now than before because of the current AI revolution. I believe this trend will continue for many years because I believe Nvidia will continue dominating the AI server market and maintain over 80% of the market for many years. This year, Nvidia's revenue growth is expected to grow by around 110% year over year. Its EPS is expected to grow by around 143% year over year. Next year, Nvidia's revenue is expected to grow by around 43% year over year, and its EPS is expected to grow by around 43% year over year. This is my prediction. I believe analysts are underestimating Nvidia's growth for next year. I believe analysts will increase Nvidia's revenue forecast to over $200 billion for next year once they see that Nvidia sells a lot of Blackwell systems in the next quarter. Here's the important part you should know. At the time making this video, the data center business contributes about 87% of Nvidia's total value, while the gaming business contributes about 9% of Nvidia's total value. The AI data center business will continue to be Nvidia's biggest growth driver for many years because we're still at the beginning of the current AI revolution. Over the next several years, all the largest AI companies, largest tech companies, and hyperscale cloud providers will continue building out their AI infrastructure because they need to stay competitive in the current AI arms race. If they don't invest in AI infrastructure now, they will be left behind. Right now, Nvidia's revenue growth is still mainly driven by the current gen Hopper platform. Blackwell sales are expected to be much higher than Hoppers going forward. This upcoming quarter, Nvidia will start selling several $billion of Blackwell systems. Next year, Nvidia will ramp up Blackwell systems much faster than its Hopper platform. In fact, according to Nvidia, Blackwell is already sold out for the next year. This shows that the demand for Blackwell far exceeds the supply. And if customers cannot buy Blackwell, they will likely buy Nvidia's Hopper systems. Also, Nvidia has exceptionally strong pricing power because it has a near monopoly in the AI server market. Nvidia's top-end Blackwell AI systems are expected to be more expensive than the current Hopper AI systems. This means Nvidia will earn much higher value per Blackwell system than the Hopper system. Here's an example. According to this article, each B100 GPU can cost between $30,000 and $35,000. Nvidia is not planning to sell each Blackwell GPU individually. Instead, Nvidia is planning to sell the entire Blackwell system, such as the top-end GB200 NVL72 system. The expected price for each top-end Blackwell GB200 NVL72 system is around $3 million. You need thousands of Blackwell systems if you want to build an AI data center. Jensen Huang said this in a recent earnings call. He explained that the tail end of the last gen of foundation models were at about 100,000 Hoppers. The next gen foundation models will start at 100,000 Blackwells. This is very important because it shows that the next gen AI models will require a minimum of 100,000 Blackwells to start. I believe this suggests that Nvidia's revenue will likely be much higher next year and more than analyst estimates. Let's say each Blackwell GPU is around $30,000. If you want to build an AI data center for the next frontier AI models and AI applications, you will need around 100,000 Blackwells to start. Building an AI data center with 100,000 Blackwell GPUs will cost around $3 billion. This price does not include other server equipment and the amount of power that's needed to power these AI systems. Let me share this article with you. I think it suggests that analysts are likely underestimating Nvidia's growth for next year. According to this article, Taiwan's supply chains have indicated that Nvidia will likely sell over 200 billion worth of Blackwell GB200 AI servers in 2025. GB200 is just one SKU. Also, this estimated 200 billion in revenue does not include Nvidia's other revenues from its gaming business, professional visualization business, and auto business. According to Morgan Stanley's research and several supply chain sources from Taiwan, Nvidia is expected to ship 60,000 to 70,000 units of Nvidia's GB200 AI servers. Each server costs around $2 million to $3 million per unit. This means Nvidia will likely earn $210 billion from just Blackwell servers alone next year. This does not include other server products and Nvidia's other businesses. Many investors do not know this. Looking at Nvidia's supply chain in Taiwan is one of the best ways to estimate Nvidia's growth going forward. Nvidia needs TSMC's chip-on-wafer-on-substrate or CoWoS advanced packaging and technology to package its latest AI chips together. According to DigiTimes, TSMC is planning to increase its CoWoS capacity from 35,000 units per month for 2024 to 75,000 units per month for 2025 and 135,000 units per month for 2026. Of course, most of TSMC's CoWoS capacity expansion is reserved for Nvidia. I believe this suggests that Nvidia's data center revenue growth will likely be much higher over the next 2 years and more than analyst estimates. It is essential to understand Nvidia's product roadmap if you want to know Nvidia's estimated growth over the next several years. I mentioned this earlier. To stay well ahead of competitors, Nvidia is planning to have a 1-year product cadence instead of the previous 2-year product cadence. Nvidia will release new data center products with incremental upgrades every year. For example, Nvidia will start shipping Blackwell systems this Q4 quarter. Next year, Nvidia will introduce the Blackwell Ultra platform. In 2026, Nvidia will release the Rubin platform, the ARM-based Vera CPU, and other upgraded NVLink and networking switch. Interestingly, Nvidia's product roadmap matches TSMC's CoWoS expansion for the next 2 years. Here is another thing we have to consider. Sovereign AI will be a much larger business for Nvidia going forward. Right now, all the major countries outside of the US are racing to build their AI infrastructure because they don't want the US to be the only leader in AI. The major countries in Asia and Europe are planning to build their AI infrastructure because they want to build their foundation AI models and AI applications that are based on their own language, their own culture, their own domestic data, and of course, they want to use their own data centers. Sovereign AI will benefit Nvidia a lot going forward because all the major countries outside of the US will need Nvidia to help build their AI infrastructure. At the time of making this video, about 40% to 50% of Nvidia's data center revenue is coming from Nvidia's hyperscale cloud customers such as Amazon, Google, Microsoft, and Oracle. So many investors are concerned that the hyperscale cloud providers may slow down their capex spending on AI infrastructure if they don't get enough ROI from their AI investments. I will talk more about the ROI concern in a separate video, but in a nutshell, if you have reviewed Amazon, Microsoft, Google, and Oracle's recent earnings call, you will know that all the hyperscale cloud providers are planning to increase their AI capex much more next year because they don't have enough AI compute to rent out to their customers. Their customers need much more AI compute to build their AI applications and AI models. This year, Amazon, Google, Microsoft, and Meta's combined capex is expected to reach around $200 billion. Next year, the hyperscale cloud providers' combined capex is expected to reach $300 billion. Of course, most of this $300 billion capex will be going toward Nvidia's Blackwell AI systems. Again, all the large tech companies, the largest AI companies, and hyperscale cloud providers are planning to increase their spending on AI infrastructure because they don't want to be left behind in the current AI arms race. If they don't invest in AI infrastructure now, they will be left behind by others. Over the next 10 years, AI systems will need to be much more energy efficient because AI data centers are always limited by how much power they can use. I believe this trend will benefit Nvidia a lot because Nvidia's customers are always looking for AI systems that are much more powerful and more energy efficient. Let me give you an example. Over the past 8 years, the performance of Nvidia's AI GPU has increased by around 100,000 times. This huge performance gain is moving from Nvidia's Pascal GPU to Nvidia's upcoming Blackwell GPU. Moreover, energy efficiency has improved much more during the same period. Over the past 8 years, the energy required to generate LLM tokens has decreased by around 45,000 times. This shows that the cost of training AIs, inferencing AI models, and building AI applications will be much lower going forward. For example, Nvidia's Pascal GPU needs around 17,000 joules to generate each LLM token. Nvidia's Hopper GPU needs around 10 joules to generate each LLM token. Nvidia's upcoming Blackwell will use around 0.4 joules to generate each LLM token. It's impossible for the traditional x86 server CPUs to produce this kind of performance gain while reducing energy costs substantially. This is why I believe Nvidia's hyperscale customers and large enterprise customers will continue increasing their AI capex over the next several years. They need much more powerful AI systems that are also much more energy efficient. Let me share the most important parts of Nvidia's earnings call with you. You will learn about the 3 scaling laws: pre-training scaling, post-training scaling, and now inference time scaling that will drive Nvidia's growth going forward. You will also learn about the large demand for Blackwell in the upcoming quarters and the secular trends that will benefit Nvidia's AI data center business over the next several years. Jensen Huang said this.
Foundation model pre-training scaling is intact, and it's continuing. As you know, this is an empirical law, not a fundamental physical law. But the evidence is that it continues to scale. What we're learning, however, is that it's not enough. That we've now discovered 2 other ways to scale. One is post-training scaling. Of course, the first generation of post-training was reinforcement learning human feedback, but now we have reinforcement learning AI feedback and all forms of synthetic data generated data that assists in post-training scaling. And one of the biggest events and one of the most exciting developments is Strawberry, ChatGPT o1, OpenAI's o1, which does inference time scaling, or what's called test time scaling. The longer it thinks, the better and higher quality answer it produces. And it considers approaches like chain of thought and multi-path planning and all kinds of techniques necessary to reflect and so on and so forth. And it's intuitively, it's a little bit like us doing thinking in our head before we answer a question. And so we now have 3 ways of scaling, and we're seeing all 3 ways of scaling. And as a result of that, the demand for our infrastructures is really great. You see now that at the tail end of the last generation of foundation models, we're at about 100,000 hoppers. The next generation starts at 100,000 Blackwells. And so that kind of gives you a sense of where the industry is moving with respect to pre-training scaling, post-training scaling, and then now, very importantly, inference time scaling. And so the demand is really great for all of those reasons. But remember, simultaneously, we're seeing inference really starting to scale up for our company. We are the largest inference platform in the world today because our install base is so large, and everything that was trained on Amperes and Hoppers inference incredibly on Amperes and Hoppers. And as we move to Blackwells for training foundation models, it leaves behind it, a large install base of extraordinary infrastructure for inference. And so we're seeing inference demand go up. We're seeing inference time scaling go up. We see the number of AI native companies continue to grow. And of course, we're starting to see enterprise adoption of agentic AI really is the latest rage. And so we're seeing a lot of demand coming from a lot of different places. Blackwell production is in full steam. In fact, as Colette mentioned earlier, we will deliver this quarter more Blackwells than we had previously estimated. And so the supply chain team is doing an incredible job working with our supply partners to increase Blackwell, and we're going to continue to work hard to increase Blackwell through next year. It is the case that demand exceeds our supply, and that's expected as we're in the beginnings of this generative AI revolution, as we all know. And we're at the beginning of a new generation of foundation models that are able to do reasoning and able to do long thinking, and of course one of the really exciting areas is physical AI that now understands the structure of the physical world. And so Blackwell demand is very strong. Our execution is going well. But the other factor that's very important to note is that when there's a data center of some fixed size, and a data center always is of some fixed size, it could be, of course, tens of megawatts in the past, and now it's, most data centers are now 100 megawatts to several hundred megawatts, and we're planning on gigawatt data centers. It doesn't really matter how large the data centers are. The power is limited. And when you're in the power limited data center, the highest performance per watt translates directly into the highest revenues for our partners. And so on the one hand, our annual roadmap reduces cost. But on the other hand, because our perf per watt is so good compared to anything out there, we generate for our customers the greatest possible revenues. And so that annual rhythm is really important to us, and we have every intentions of continuing to do that. And everything's on track as far as I know. Hopper demand will continue through next year, surely the first several quarters of the next year. And meanwhile, we'll ship more Blackwells next quarter than this, and we'll ship more Blackwells the quarter after that than our first quarter. And so that kind of puts it in perspective. We are really at the beginnings of two fundamental shifts in computing that is really quite significant. The first is moving from coding that runs on CPUs to machine learning that creates neural networks that runs on GPUs. And that fundamental shift from coding to machine learning is widespread at this point. There are no companies who are not going to do machine learning. And so machine learning is also what enables generative AI. And so on the one hand, the first thing that's happening is $1 trillion worth of computing systems and data centers around the world is now being modernized for machine learning. On the other hand, secondarily, I guess, is that on top of these systems we're going to be creating a new type of capability called AI. And when we say generative AI, we're essentially saying that these data centers are really AI factories. They're generating something. Just like we generate electricity, we're now going to be generating AI. And if the number of customers is large, just as the number of consumers of electricity is large, these generators are going to be running 24/7. And today, many AI services are running 24/7, just like an AI factory. And so we're going to see this new type of system come online, and I call it an AI factory because that's really as close to what it is. It's unlike a data center of the past. And so these two fundamental trends are really just beginning. And so we expect this to happen, this growth, this modernization, and the creation of a new industry, to go on for several years. The way to think through that, Vivek, is I believe that there will be no digestion until we modernize $1 trillion worth of data centers. If you just look at the world's data centers, the vast majority of it is built for a time when we wrote applications by hand and we ran them on CPUs. It's just not a sensible thing to do anymore. If every company's CapEx, if they're ready to build a data center tomorrow, they ought to build it for a future of machine learning and generative AI, because they have plenty of old data centers. And so what's going to happen over the course of next, X number of years, and let's assume that over the course of 4 years, the world's data centers could be modernized as we grow into IT. As you know, IT continues to grow about 20-30% a year, let's say. And so let's say by 2030, the world's data centers for computing is call it a couple $1 trillion. We have to grow into that. We have to modernize the data center from coding to machine learning. That's number one. The second part of it is generative AI. And we're now producing a new type of capability that the world's never known, a new market segment that the world's never had. If you look at OpenAI, it didn't replace anything. It's something that's completely brand new. It's in a lot of ways, as when the iPhone came, it was completely brand new. It wasn't really replacing anything. And so we're going to see more and more companies like that. They're going to create and generate out of their services essentially intelligence. Some of it would be digital artist intelligence, like Runway. Some of it would be basic intelligence, like OpenAI. Some of it would be legal intelligence, like Harvey. Digital marketing intelligence, like writers. So on and so forth. And the number of these companies, what are they called? AI native companies are just in hundreds, and almost every platform shift. There were internet companies, as you recall. There were cloud first companies. There were mobile first companies. Now they're AI natives. And so these companies are being created because people see that there's a platform shift and there's a brand new opportunity to do something completely new. And so my sense is that we're going to continue to build out, to modernize IT, modernize computing, number one, and then number two, create these AI factories that are going to be for a new industry for the production of artificial intelligence.
Let me show you this consensus forecast from Seeking Alpha, so you will know NVIDIA's expected growth rates going forward. This year, NVIDIA's revenue is expected to reach around $130 billion or grow by around 112% year over year. Next year, NVIDIA's total revenue is expected to grow by 50% year over year. Next year, I believe NVIDIA's revenue should reach slightly over $200 billion because of much higher Blackwell sales. After that, NVIDIA's revenue growth is expected to decelerate more over the next several years. In terms of EPS forecast, NVIDIA's EPS is expected to grow by around 128% this year. Next year, NVIDIA's EPS is expected to grow by around 50% year over year. After that, NVIDIA's EPS growth is expected to decelerate more over the next several years. Let's take a look at NVIDIA's forward PE valuation here. NVIDIA's forward PE is expected to be around 46 this year. This is not high at all for a high growth mega cap tech company. NVIDIA's EPS is expected to grow by around 128% year over year this year. Next year, NVIDIA's forward PE is expected to drop to around 31 because its EPS is expected to grow by around 50% year over year. If we compare NVIDIA's forward PEs to its historical PEs, I believe NVIDIA is slightly undervalued now. Right now, I'm developing an investing application with a friend. This is a preview. We expect that this investing application will be out sometime over the next few months. We have an algorithm that calculates NVIDIA's fair value every quarter. This orange line is NVIDIA's fair value. The blue line is NVIDIA's stock price. The green line is the analyst average price target over the next 12 months. Of course, the best time to buy NVIDIA stock is when it's undervalued or when it dips below the orange fair value line here. I actually bought more NVIDIA shares over the past few months when it dipped well below the orange fair value line here. I knew several news outlets were spreading fake news about NVIDIA, delaying its Blackwell systems, so I bought more NVIDIA shares when NVIDIA was undervalued. Based on the latest fair value estimate here, I believe NVIDIA's fair value is around $148 per share. This means I believe NVIDIA is slightly undervalued now. Just to compare, Morningstar has recently increased NVIDIA's fair value to around $130 per share. This suggests that NVIDIA is either fairly valued or slightly undervalued at the time of making this video. So will I buy NVIDIA stock? I already have NVIDIA shares in this account. I also have more NVIDIA shares in other accounts. I will buy a lot more NVIDIA shares going forward because I believe NVIDIA will continue dominating the AI server market for many years. Based on the competitive advantage I talked about in this video, I believe NVIDIA will maintain over 80% shares of the AI server market for many years because of CUDA and how NVIDIA builds the entire AI infrastructure. I believe it's nearly impossible for competitors to compete with Nvidia because no one builds the entire AI infrastructure and rack-scale AI systems like Nvidia. AMD is only starting to copy Nvidia's AI infrastructure strategy. Even if competitors try to make better AI GPUs, their AI software stack cannot compete with Nvidia's proprietary CUDA accelerated computing platform. This is my prediction. I believe Nvidia will reach over 4 trillion in market cap by next year because of much higher Blackwell sales. Based on TSMC's CoWoS expansion plan and other supply chains from Taiwan, I believe analysts are underestimating Nvidia's revenue growth over the next 2 years. I believe Nvidia's largest customers will continue to increase their AI capex over the next several years because they want to stay competitive in the current AI arms race. If they don't invest in AI infrastructure now, they will be left behind by others. Nvidia's largest customers will need AI systems that are much more powerful and more energy efficient going forward. Nvidia's Blackwell and Rubin platforms will decrease the cost of building frontier AI models and AI applications much more going forward. Now, all these are only my opinions and my analysis that's based on my research. They are not financial advice. There are always risks associated with investing. It's very important to invest in what you know and not speculate. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.